All right. Thanks so much for joining us this morning, Mohit and Devan. Good to have you with us. We need to also address the JSPL earnings. So let's just welcome in Ravi Uppal, who's joining us on the show. Weak set of numbers. In fact, Mr. Uppal, let's just start off by asking you a little bit about, the basic figures this time around. And did some of the moves by the government, the safeguard duty, for instance, help at all operationally, or are you still seeing pressure on all fronts?
Well, you know that we are quite happy with the performance of the fourth quarter. I would say that fourth quarter will mark a turning point for JSPL. The last 18 months, have been a tough period as the prices of steel have really gone down month after month. But I think after the introduction of the MIP, positive developments have taken place. Fortunately, the international prices have also gone up now. They're almost at the level of MIP or slightly higher than that. So I think, the increase in prices definitely have come as a much needed relief for the steel industry. And you could see that as a result of this, in our earnings, both at the EBITDA level and the contribution have risen considerably during the fourth quarter compared to the third quarter of the same year, as well as the same quarter of the previous year. So, the EBITDAs are up by 59%. And what is really noteworthy is that our volumes have also gone up. Our plant in Oman was commissioned, and from the domestic market also we were able to deliver a lot more steel. So the total volumes have gone up by between 39 to 43% in the domestic and the export market. So I think all in all, the steel business of JSPL has done well. And it sets the stage for continued better performance for us in the first quarter of 2016-17. So I think that's how it is. As for your second question about the price realization, the price realizations have definitely improved compared to how they were, in November, December, Jan, and Feb. So, but I think we still have some more distance to go before we can come to the price level which are sustainable.
Mr. Uppal, steel has been stable, of course, at the EBIT level, but power has been a key laggard. Run us through really what's happening on that front.
Well, as far as steel is concerned, I mentioned to you that, we have done much better on steel, especially in the fourth quarter. The volumes really rose, and we have been able to deliver 18% higher sale in the steel business compared to the previous year. And even international business taken, we have grown by about 12%, that is on consolidated sales level. As far as power is concerned, although our units were absolutely in fine fettle and could deliver as much power as required, but somehow the demand for power has been quite tepid. And that has resulted in lower utilization of our power capacity during the year. And we were really hoping that demand will look up. We still think that demand should look up because large parts of the countries are still going without power supply. So the latent demand is pretty large, but I think once the health of the DISCOMs is restored, after the Uday scheme is implemented, I think the demand will surely go up for power as well. But last year, yes, the PLF was not as much as we had hoped this to be, and we really look forward to much more dispatches in the weeks and months to come.
How has the plant load factor been, Mr. Uppal, this particular quarter? What's the outlook as well going forward?
As I mentioned, the PLFs that we had on the power were lower compared to what we had in the same quarter last year. And there's definitely room for the PLFs to go up. We got units which are fully commissioned, synchronized, ready to go. So we are really looking forward to higher demand for power.
Okay, in an environment of rising iron ore costs as well, how are margins looking? What's the trend there? Any comment as well on the coking coal cost that you're expecting going forward?
Well, that some amount of costs are likely to go up, especially iron ore and also coking coal. But we are watching it very cautiously because if you take Indian market, the mining capacity for iron ore has gone up considerably. If you look at the year 14-15, the total iron ore that was produced was about 145 million tons, and last year they have finished with 185 million tons. So the output of iron ore has gone up. This has really helped to keep the iron ore prices in check. But it remains to be seen how these prices behave in the year 16-17. Coking coal, which is largely imported, the prices started to go up. Once again it remains to be seen how this price trend is in the year 16-17. If the international demand for the steel goes up, the prices for coking coal may also go up a little bit. So we are watching the prices of the input materials very closely, and let's just hope that they remain in control and at the level that we have seen in the last 2 years.
Okay, let's talk about the deal then. How much of an interest cost saving will come about by way of the 4,000 crore enterprise value?
Well, let me first put the facts in order. The deal value is 6,500 crores, subject to some condition precedent, which are basically relating to we securing the PPA as well as the coal supply. We have been given our 2 years period. So we're pretty hopeful that we will be able to fulfill those conditions and we will be able to realize the full value of the deal. In the event we don't succeed, in fulfilling those conditions, in that event the price will get revised to 4,000 crores. So the price right now is 6,500 crores. And as far as PLF is concerned, that we will continue to operate the assets as we have done in the past. We'll continue to secure more orders for dispatch of power from both the 1,000 megawatt as well as the balance 2,400 megawatt.
Mr. Uppal, coal sourcing, how's that being done for the Tamnar plant? And how much capacity as well are you looking at? The long-term PPAs, what are they inked for? How much time?
See, the coal requirements of the 1,000 megawatt are being met through coal auctions, which are being held in the neighborhood. As you know, this plant is located right in the middle of mines. So we have not seen any kind of shortage when it comes to getting the coal for the power plant. But very recently, government has also, transferred some coal blocks and coal linkages to the state governments. And these governments will basically invite power, the offers for supply of power. Those bidders who are successful in this, they will be given the blocks and linkages. And we are quite hopeful that given the status of power project and our competitive structure, we should be able to secure either a block or a coal linkage in the near future once the state government goes out for bidding.
What's the current PLF as well, Mr. Uppal, for the 1,000 megawatt capacity, and what's the EBITDA going to be per unit?
Well, that we don't measure PLF unit by unit. I mean, as I mentioned earlier, we have been running out of the 4 units, between 3 to 4 units in the recent months out of this 250 megawatt unit. And, out of the units that we are running, we have been having a capacity PLF of about 85%. So we do hope that with the increase in demand of power, that these units will come to a level of 95% plus, capacity utilization.
And lastly, before we let you go, Mr. Uppal, what are your current debt levels and how much is that likely to come down post the deal?
Well, as of now, our total debt is about 46,000 crores at the end of March. Let me just clarify something to you as to why we have gone on, selling this asset. Our other businesses are growing very rapidly, like you've seen in the case of steel. In the last quarter itself, the total, sales volume has gone up, 25 to 28%. So we obviously, therefore, have a requirement of liquidity, more support for working capital. So in order to meet the enhanced need of working capital liquidity, we have decided to, sell this particular asset at this moment. And whatever balance is there, we will, use that amount to reduce our debt. But as of this moment, I cannot give you any number as to how much we will reduce debt and how much we will raise for, use for liquidity and working capital support.
All right, Mr. Uppal, thanks so much for joining us. Let's also get you